Hey, Bubba Trades! I want to do a video analysis update of the stock market. We'll talk about QQQ as well as Apple, Facebook, Advanced Market Devices, PayPal, Taiwan Semiconductors, Industrial ETF, XLI, Disney, Boeing, Carnival Cruise Lines, AMC Theaters, Virgin Galactic, XLF, the Financials, Berkshire Hathaway, and small cap ETFs, IWM and IJT. We'll talk about electric vehicle ETF, Drive, as well as Neo, Next Area Energy, Tesla, ARKQ, and Nano Dimension. We'll talk about Netflix, Salesforce, Amazon, Roku, TWLO, OKTA, Pinterest, Fastly, Procter & Gamble, Ethereum, and Marathon Patent Group. So just in the short term, is there a reason that bulls for the next 2, 3, 4 weeks should be extra cautious in the stock market? The quick answer to that is yes, okay? And it's not because there's not a lot of evidence that the general medium term, long term time frames, the stock market is going to continue to be bullish, or it's not because we don't have many sectors like these small caps, like the electric vehicles, like the software stocks, like even a lot of industrial stocks that haven't done much all summer, that are ready to resume leadership, take over in the fourth quarter like they did in 2020's fourth quarter, but because we have a quad witching date coming around. So these quad witching dates are extremely important. They're the end of the financial quarter, and they're the 4 largest days each year that we have options expire. So on this March quad witching date alone, we had about $2 trillion in SPX options alone expire. Okay, that's a big deal, because if you're selling options and your expiration date approaches, you are having an increased amount of gamma each day. So as you get closer to your expiration, the gamma of options, especially at the money options, is going to be increasing exponentially. So gamma measures the rate of change of an options delta. So it generally measures the explosiveness or unpredictability of those option premiums. Well, if you're short options, you don't really want that quality in your position, because you can potentially lose an infinite amount of money. So as your expiration date approaches, you are under increased pressure as an option seller to cover your short option positions. So that's why we have a lot of big moves, around these dates. What else is going on? Large institutions, they're trading on a quarter-to-quarter basis. So they're turning in their report cards, and they're also front-running the next quarter's big winners. Think about it this way. If you're turning in your report card in the next 2 or 3 weeks, and you haven't owned, Apple or Advanced Market Devices or Pfizer or Microsoft or Google or Facebook, for the past, 3 or 4 months, you're not going to be managing anyone's money in the fourth quarter. So what they're also doing is they're front running the next quarter and picking the next quarter's big winners. Think about this March quad witching date. Up until March of 2021, right? We had this little sell-off. What was really going on was we were rotating into some stocks that had been completely sideways, for the past 6 or 7 months, right? No one really wanted anything to do with Nvidia or Facebook, or Microsoft or Home Depot until that magical quad witching date comes around, and then all of a sudden, boom, a whole new group of leaders is emerging in the market, right? Think about this most recent June quad witching date. No one really wanted anything to do with Advanced Market Devices or Nike or Apple or Pfizer until this date rolled around, and then all of a sudden, we have a whole new group of leaders emerging in the market. So this could be a good thing, especially for people who are bullish in sectors that haven't really outperformed in the third quarter. So if we look at the Nasdaq right now, we have a wave 1 and a wave 2. We have a large wave 3. We pull back to the 23.6% retracement, and we put in a wave 4 low. So that's kind of the wider invalidation. If we're above 352, that's a wave 4 we've put in. We're within a wave 5 higher right now. So the length of wave 5 will be the length of wave 1 in orange, or the length of wave 1 in black, placed at the wave 4 low. That's going to give a wave 5 target zone between 387 to 397. I'm leaning towards the 397 target, which is the length of wave 1 in black, placed at the wave 4 low. It gives us a minimum wave 5 target of 397. I think that's going to be reached because Nvidia has gone the length of the rally from early March to mid-April, placed at the wave 4 low, and also because if you zoom out, then the Nasdaq QQQ reaching 397 is a big deal, because on the larger degree, that's what you get if you take the length of the March to September rally and place it at the low of the bull flag consolidation. And as I pointed out on this chart, recently Microsoft and Nvidia have replicated the entire March to September rally, placed at the low of the flagging consolidation. It looks like the Nasdaq QQQ is getting ready to do that right now. It looks like Facebook is getting ready to do that as well in the short term. So if we want to be a little tighter, we can say that QQQ is within a wave 5 higher right now. This is wave 1 of wave 5 and wave 2 of wave 5. If the Nasdaq is above around 360, it should go all the way to 397 before the next big, pullback. I think the Apple chart is kind of letting us know what might happen in the short term. even when we go on a wave 5 higher, that's probably not going to be some type of super cycle top for big tech. So let's look at Apple right now. It goes on a wave 1 and a wave 2, has a big wave 3 impulse that ends at the 161.8% extension, puts in a shallow wave 4 low at 141. So if this wave 4 low holds of 141, Apple's within a wave 5 higher right now. The length of wave 1, place at the wave 4 low, will take Apple to 162. That's going to be a pretty important wave 5 target. But if we zoom out to the bigger degree, what's that going to be? Well, I believe that from this low that we put in last September, Apple formed a wave 1 and a wave 2. So it's within a larger degree wave 3 right now. This is wave 1 of wave 3 and wave 2 of wave 3. We end wave 3 of wave 3 at 150, and we end wave 4 of wave 3 at 141. So wave 5 of wave 3, in my opinion, will end at 162. Well, that means that even when Apple reaches 162, it should pull back, but it shouldn't be a deep pullback. It should be a shallow wave 4 correction, and then we're going to go on a wave 5 higher and ultimately reach, in my opinion, the length of the entire rally from March to September, placed at the September low, and that's where Apple's going to see 188. I think that's going to happen in the fourth quarter. We'll see Apple go to 162, have a shallow wave 4 correction, and then go on a wave 5 higher. Towards the end of the fourth quarter, we should see 188. Has been reached for Apple. So I think it's looking good. If we look at Facebook, we can see this, similar idea. In the shorter degree, we see that it's very similar to, Apple and QQQ. It's gone on a wave 1 and put in a wave 2 low in the middle of March. And then began another wave 1 and another wave 2, had a big wave 3 impulse, and it put in wave 4 at the 38.2% retracement. So I said that low is most likely going to hold. And if Facebook's above 347 with 337 invalidating, it would begin a wave 5 higher. That would be the length of wave 1, place of the wave 4 low. We've now broken the wave 3 high. So there's a lot of evidence that Facebook is within a wave 5 higher right now. In my opinion, it will be the length of wave 1 in black, place of the wave 4 low. Facebook will reach 425, and that's going to be important because that means Facebook will actually go past the length of wave 1, place of the wave 2 low. So when Facebook ultimately gets to 425, we're expecting a correction, but we're also expecting that's going to be a wave 4 correction, and then we're going to have a wave 5 higher. Facebook kind of looks like, this idea that some of these large caps are going to go form a bull flag and really digest these gains, give some of their outperformance to the small caps, to some of the growth stocks. But this is kind of what I could see for Facebook. We reach 425. That completes wave 3. We have a shallow wave 4 correction that's mostly sideways. We go on a wave 5 higher in the bigger picture. So that's Facebook. If we look at advanced market devices, on the bigger degree, this is a wave 1 and a wave 2 that's very similar to a lot of semiconductor stocks. And then we have a huge wave 3 impulse from the March low to the January high. So this is a wave 3, and I believe we put in a wave 4 at the 38.2% retracement. So coming into this quarter, we had on the lookout that advanced market devices would go not only the length of wave 1, place at the wave 4 low, which is already done, but it would also go the length of wave 3, place at the wave 4 low, and it's very close to doing that. That's going to take advanced market devices all the way to 136. If we zoom in on advanced market devices, we can kind of see how it's going to get there. The more aggressive view is that this is a wave 1 and a wave 2 from this, early mid-May low. We then form another wave 1 or another wave 2. This could also be counted as a wave 3 or a wave 4. In my opinion, either way, it's inconsequential. Advanced market devices will hold above 98 to 101 because that's the 61.8% retracement of this rally, and it's going to go the length of this rally, place at this low, and advanced market devices will reach 138. So this could be a 1-2, 1-2 L8 wave nest, or it could be a 1-2, 3-4, and we're looking for a wave 5 higher. Either way, we should see advanced market devices take another leg higher. There will be the length of this, kind of short rally we had in July, placed at the wave 4 low. I believe AMD will hold above 98, head to 136, 138 for this wave 5 target. There will be the length of wave 3, placed at the wave 4 low, and that's where we're going to see on the bigger picture that advanced market devices will be the first of many, especially semiconductor stocks, that's replicated the entire rally from March to January, placed at the May low. So AMD is looking good. It has a very similar chart to a lot of these big tech, a lot of these semiconductor stocks like Qualcomm and Taiwan Semiconductors that really haven't done, much. And I think that Taiwan Semiconductors, Qualcomm, and Intel, they're going to follow AMD and NVIDIA in the next quarter. So for Taiwan Semiconductors, it's very identical to AMD. We have a wave 1 and a wave 2. Then from March to, mid-February, we have a wave 3. We put in a wave 4 low at the 38.2% retracement. I don't believe Taiwan Semiconductors will go below 104. It's going to begin a wave 5 higher. There will be the length of wave 3, place at the wave 4 low. And towards the end of the first quarter, I'm looking for Taiwan Semiconductors to go on a wave 5 rally. This is the length of this entire wave 3 rally, place of this wave 4 low. And I'm going to see Taiwan Semiconductors go to 208. I'm going to see Qualcomm, really break above this high as well. And Intel, I think that we're going to see these 3 semiconductor names break out and go follow AMD and follow NVIDIA. Taiwan Semiconductors, I wanted to show in this video, it won't go below 104. It will go the length of wave 3, place of the wave 4 low, reach 208. For a wave 5 target. We've already seen advanced market devices get very close to accomplishing that feat. We'll talk about some. Before we do the industrials, I want to talk about PayPal. PayPal is looking pretty good in the short term. This is actually a conservative view that from this low, we form a wave 1 and a wave 2. This is a wave 3. Then we pull back to, just below the 50% retracement. So this could be another wave 1 and another wave 2. So it's actually conservative to say that this is a wave 4 correction and we're expecting a wave 5 higher. So I believe the length of wave 1, place of the wave 4 low, will take PayPal to 321. And we're not going to see PayPal go below 266 to 262. PayPal looking good, in the next, 1, 2, 3 months max. I think we're going to see this 324 target get reached, and we're not going to go below 266 to 262. And this is actually a conservative view because this very well could be a 1-2-1-2 Elliott wave nest. We'll know if that's the case when PayPal blows past 321. So that's PayPal. Let's talk about some, reopening stocks. XLI, the industrials, looking very good. A very clean count right here. It forms a wave 1 and a wave 2 from that October 30th low, puts in a wave 3 high, makes a new high on the relative strength index, then has a shallow wave 4 correction that ends at exactly the 38.2% retracement. I believe it's put in wave 4. The length of wave 1, place of the wave 4 low, should take in the next 2.5 months, 3 months at the max. XLI goes to 114. It's unlikely the market will crash during that time, but I don't believe XLI will go below 98. I think it's within a wave 5 higher right now. The length of wave 1, place of the wave 4 low, will take XLI to 114. The idea of a wave 5 higher, in reopening stocks is everywhere in the market. Disney is a big one. It forms a wave 1 and a wave 2, has a big wave 3 that it puts in, and then it has a wave 4 that it ends at the 38.2% retracement. I don't believe Disney will go below 167. It will go the length of wave 1, place of the wave 4 low. It should reach, pretty soon. We're talking about XLI 2 months from now, 2.5 months from now, going to 114, and this idea of a wave 5 higher, that's about 2.5, 3 months. And the reopening, the industrial, the travel and leisure stocks is all over the market. I think Disney's going to see 216, and then that's going to be a place where bulls, generally want to be cautious because that's going to be 1, 2, 3, 4, 5 waves from that March 2020 low. In my opinion, that's going to complete a large degree wave 1, and then the opportunity of a lifetime will be to buy and ride this wave 2 correction for waves 3, 4, and 5 to the upside. So Disney should go to 216, complete 1, 2, 3, 4, 5 waves from the March 2020 low. We look at FCG. This is an ETF full of oil and natural gas stocks, so don't let the natural gas part fool you. Some of the largest holdings are Occidental Petroleum, ConocoPhillips, DCP, a lot of pure oil stocks. Okay, so this is an oil play. It's just a very pretty view of where the oil sector will go on a wave 5 higher. I think that from this March 31st low, this is a wave 1 and a wave 2 for FCG. It has a big wave 3 impulse. It pulls back to the 38.2% retracement. I don't believe it will go below the 50% retracement of 11.34. It will begin a wave 5 higher. It will be the length of wave 1, place of the wave 4 low. The wave 5 target is around 18.75. That's another one, 2.5, 3 months more conservatively, that's going to be reached. It's unlikely the market will crash while oil, has 30-35% to the upside. And it's also unlikely that Boeing, and some of these other reopening stocks are going to be doing well. If we look at Boeing, it's formed a wave 1 and a wave 2 from this March 2020 low. And if we think about it, Southwest Airlines is already above, the pre-March 2020 high. So is Disney. So is Expedia. So is SeaWorld. The travel and leisure sector, so many stocks have already broken above, the pre-March 2020 high. I think Boeing is going to play follow the leader. Ultimately, the big wave 3 target is the meeting of this pitchfork. In the short term, there's a really clear view from Boeing that this is a wave 1 and a wave 2. If we see Boeing continue to hold above 191, it's within a wave 3 of wave 3 right now. The next target is about 296 to 307. We talk about XLI going to 114, Disney going to 216. That's going to be, while Boeing is going, in my opinion, to 296 to 307. I would expect a shallow wave 4 correction and then a wave 5 higher higher, ultimately into the 350s, the 360s. I think this is a big elephant in the room for bulls and bears in the stock market, that Boeing is still below, this March 2020 high, and it's got, room to the upside to go. I think it's going to take another leg higher, with Disney, with these oil stocks, with XLI, the industrials, going to 114. Carnival Cruise Lines is another example of a wave 5 higher in the travel and leisure side. So very similar to Disney. I think this is a wave 1 and a wave 2, a wave 3 and a wave 4. I believe this is a leading diagonal forming for Carnival Cruise Lines. If you connect the trend line from the wave 1 and wave 3's highs and the trend line from the wave 2 and wave 4 lows, then the next wave 5 target should be the length of wave 1, place of the wave 4 low. We have a dual target, this upper bound trend line. This would be a wave 5, and this would be 1, 2, 3, 4, 5 waves from this low for Carnival Cruise Lines. I think that would be a large degree wave 1. Carnival Cruise Lines goes up to around, in my opinion, 37, while Disney is going to 216. That's going to complete a large degree wave 1. We'll have a wave 2 correction. There will be a huge buying opportunity for waves 3, 4, and 5 to the upside. I think that the industrials, the travel and leisure stocks, the reopening stocks, they're set to really begin some outperformance in the fourth quarter. AMC Theaters, this is another meme stock. It also fits in with the idea of the reopening stocks doing well. It also fits in with the idea of a lot of distractions across the market that we could expect to see coming soon to the market near us. I think for AMC, this is a wave 1 and a wave 2. This is a huge wave 3, and then we're ending what conservatively, to be honest, is a wave 4 correction at the 61.8% retracement. Yes, this could be another wave 1 and another wave 2. I think the more conservative view is that this is a wave 3. We ended a wave 4 at the 61.8% retracement. I don't believe AMC Theaters will go below 28.91. I think it's within a wave 5 higher right now. At the very minimum, extremely conservatively, the wave 5 will take AMC Theaters to at least 72. We're going to hear from the meme stock people. I think AMC Theaters is going to hold above 28, begin a wave 5 higher right now. The more conservative view is that that's going to be at least, taking AMC above 72. It fits in with the idea, of the meme stocks, the reopening plays, really taking a lot of people off guard, as this quad witching date approaches. Let's talk about Virgin Galactic. It's in a lot of aerospace defense ETFs. It's also a meme stock. It's also a growth stock. And we talk about in the second half of this video, a lot of growth stocks, a lot of small cap stocks look like they're about to do very well. Virgin Galactic, ticker symbol SPCE, forms a wave 1 and a wave 2, a wave 3, 4, and 5, completes a large degree wave 1. This all takes about 14 months. We have an ABC correction. We put in a wave 2 between these, black 78.6 to 61.8% retracement zones. And then I believe that ends a large degree wave 2. Then we begin another wave 1 and another wave 2. So you can see here in blue, I have that's another 61.8 and 78.6% retracement. I believe Virgin Galactic is within wave 3 of wave 3 right now. We're going to see, the more conservative time target is that by the end of the, towards March to June of 2022, Virgin Galactic goes on a massive wave 3 higher. We're going to see that minimum wave 3 target is about 66 to 68. That wouldn't be the top. We'd have a shallow wave 4 correction going a wave 5 higher. But I think Virgin Galactic space is going to hold above 21 and begin at wave 3 of wave 3 higher. A lot of information coming from that, for the growth stocks, the small cap stocks, and even the aerospace defense stocks. This is a potentially explosive setup. I don't believe Virgin Galactic goes below 21. The ultimate invalidation level is 14.27. A little wide, but these price targets are pretty damn high. So the length of wave 1 placed at the wave 2 low would say a wave 3 ends around 68. Conservatively, we'll have a shallow wave 4 correction going to wave 5 higher. That wave 5 could take space, as crazy as it sounds, into the 3 figures. So extremely risky, but I think that the aerospace and the growth stocks, they're kind of supporting this idea that Virgin Galactic and some of these more meme stocks, they're going to catch the market off guard in the near future. So I think Virgin Galactic will hold above 21, begin a multi-quarter rally to 68. And honestly, I don't think that's going to be the top. If we look at XLF, the financial ETF, there's a lot to get from this chart. Very similar to XLI, it forms a wave 1 and a wave 2. Big wave 3, puts in wave 4 at the 38.2% retracement. I think the length of wave 1, placed at the wave 4 low, will take XLF to 43. It's unlikely that the market will crash while XLF is going to 43. I think XLF holds above 34.90, reaches 43. And if we look at Berkshire Hathaway, you're going to notice that Aflac and AIG and really Morgan Stanley, a lot of these financials are already above the same wave 3 high. XLF is already above the same wave 3 high. I think Berkshire Hathaway, we could already kind of quote unquote know it's going to break above this wave 3 high from this October 30th low. This is a wave 1 and a wave 2, big wave 3, and ABC correction for Berkshire Hathaway ends. And I don't think Berk B will go below 270, which is around that 266 invalidation for a wave 4. It's going to go on a wave 5 higher. That will be the length of wave 1, placed at the wave 4 low. We talk about 2.5 months from now. XLI, Disney, a lot of oil stocks taking another leg higher. That's around the time I would expect Berk B to go the length of wave 1, place at the wave 4 low. And then this might be an area, Disney reaching 216, XLI reaching 114, Berk B reaching 310. I start to get very cautious in the stock market, especially as a value, side of the market investor. Let's talk about IWM and IJT. If there's one thing that's similar to last September, it's that the small caps look ready to pick up the mantle. And a lot of these sexy growth stocks that you've forgotten about, we're going to start hearing about some of these again. IWM, wave 1, wave 2, right? Just that exact same September quad witching. They're not even really creative, right? That, no one really cares about IWM. The bears think that that's the weakest sector. And then the September quad witching date comes around, explosion for the fourth quarter. Same song, second verse this quarter, in my opinion. This is a wave 1 and a wave 2. Wave 3, wave 4 ends at the 23.6% retracement. 195 invalidates. 208 stops it out. The length of wave 1, place of the wave 4 low. I'm expecting by the end of the quarter, pretty conservatively within the next 4 or 5 months, that IWM will hold above 208 with 195 invalidating and go on a wave 5 higher to 266. That's IWM. I think IJT, this is another small cap ETF, but it's small cap growth. It forms almost identical dates and highs with IWM, but I think it's acting as a leading indicator right now. So this is IJT, the Dow Jones small cap growth ETF. I think that this is kind of being a leading indicator right now for IWM, that we're going to break above, that February 15th and that March 15th high. We're going to begin a wave 5 higher for IJT. The length of wave 1, placed at the wave 4 low, will take IJT to around 154. Those are pretty conservative wave 5 targets. I think they're going to get hit by the end of this quarter, more conservatively, in the next 4-5 months. But I think, by the end of the fourth quarter, we'll see that IWM has taken a wave 5 higher to 266 and IJT takes a wave 5 higher to 154. That really fits in with the idea, that a lot of these sexy stocks we've forgotten about, have a lot more surprises left in them. DRIV, this is an electric vehicle ETF, but don't let the name fool you. There's a lot of big tech stocks that, I really like in this ETF that haven't done much. Qualcomm, Intel, Tesla, Apple, and Neo, they're all in this ETF. I think they're all about to do well with this ETF. So for Drive, I believe this is a wave 1 and a wave 2, a wave 3, and then a wave 4 ended, around the 23.6% retracement. I don't believe DRIV will go below 24.90. I think wave 4 is in. The invalidation level is the 38.2% retracement, which is 23.92. I think both of those levels hold, and Drive goes on a rally that will be the length of wave 1, placed at the wave 4 low. That minimum wave 5 target, I think by the end of the fourth quarter, is 33.41. I think by the end of the first quarter of 2022, we're actually going to see that the wave 5 target is going to be the length of wave 3, placed at the wave 4 low. And ultimately, I'm looking for, by the end of the first quarter of 2022, that DRIV goes and reaches 38. I don't believe it will go below about 24.90 to 23.92. One holding, that I really like in this ETF, there's a lot, but, Neo looks particularly good. I like this short-term view of Neo right now because it's pretty damn clear, especially with Tesla kind of taking off right now, that this is a wave 1 from that early May, that mid-May low. Neo forms a wave 1, has an APC correction. I think it's putting in wave 2 right now between the 61.8 and 78.6% retracement. That's wave 2. Neo won't go below 30. It will go to the 161.8% extension of wave 1 of 70 by the end of the fourth quarter. Have a shallow, mostly sideways wave 4, go on a wave 5 higher to, those larger degree targets in the mid 90s, but I think that the wave 3 target, which is the 161.8% extension of 70, is going to be a big deal. Neo's going to break above that early January high and begin a wave 3, 4, and 5 higher. Neo looks ready to follow Tesla. It's actually been underperforming, the clean energy sector very recently, but I think that's going to change. We're going to see Neo hold above 30 by the end of Q4. It should reach 70 at least. Have a shallow wave 4, go on a wave 5 higher into the mid 90s. So I love Neo within the Drive ETF. Next era energy. Let's just look at the dates of, this True Blue. I think this is the largest clean energy provider. It's in a lot of the clean energy ETFs. And let's just see if we can notice anything, because we're about to look at Tesla in a second. Look, this high is January 25th. This low is March 5th. This high is April 16th. And this low is May 19th. So besides this wave one high, each of these dates are the exact same for Tesla. And for this wave one high, Tesla just puts in this wave one high 2 days before this. Okay, so I think next area energy right now, if we examine the wave count, forms a wave one and a wave two from that March low. We talked about Vestas wind systems in my past 2 videos, also forming a wave one and a wave two from this March low. That's the largest holding of ICLN, the clean energy ETF. I think next area energy is very close to breaking this, January 25th high, and it's going to be the first true clean energy stock to do so. And that's going to be a huge deal. It's going to go reach 89, but more importantly, it's going to confirm this is all accumulation. This is all basing right around the time that we're expecting a monster rotation into the clean energy stocks. Next area energy, the largest clean energy provider, I think, in the world, is going to break above the exact same January 25th high that First Solar and the TAN Solar ETF and Tesla all form, acting as a leading indicator right now that this has been accumulation for the past 6, 7, 8 months. So let's look at Tesla right now with those dates in mind. Those are the exact same dates that we just talked about for next area energy. If we look at Tesla, this is a high that's formed on January 25th. This is a low that's formed on March 5th. And then instead of April 16th, it's April 14th for the wave one high. And it's the exact same wave two low on May 19th. So I think right now that Tesla is beginning a wave three from that March low. I'm going to make sure that we can all see what this would look like. This is a wave one and a wave two. The next wave three target is 929. That would be followed by a shallow wave four correction and a wave five higher. So I want to say right now, this is not a tradable wave four. This is just a model to get what an ultimate wave five target would look like. Obviously, I don't know what wave four is going to look like until I know when wave three is going to end. If we want to be really precise, when is this shallow wave three or when is this big wave three going to end and we have a shallow wave four correction, we can form an Andrews pitchfork right now. We can see that this wave three, it could go past 929 very easily. So the whole point, no one in their right mind would short Tesla at 929 right when it breaks the 125 high for this wave four correction. I'm not quite sure that anyone hypothetically, should try to game this. But this is just an idea that this is a wave one, wave two. We're within a wave three high right now, just like NEO, just like next area energy. Tesla's going to break this January high, confirm all of this is consolidation, all of this is basing. We pointed out a while ago that this was the exact same January 25th high that Apple formed. And if there's one huge difference between this September and last September, it's just going into last September, Tesla and Apple, they had taken over the market and now they're just starting to begin, their leadership. So on the larger degree, I think that this is a wave one and a wave two for Tesla. Very similar to advanced market devices, a huge rally from March to early January and then a wave four correction. It sounds crazy that the length of this rally is going to be replicated, but I think that's going to happen. The length of wave three placed at the wave four low gives an ultimate wave five destination of 1,368. We have the path right now, how we might get there, that this is a wave five in progress. This is wave one of wave five and wave two of wave five. The next wave three of wave five target is 929. We'll have a shallow wave four correction. Then that wave five of wave five should take Tesla at least to 1,368. Tesla looking good. I wanted to talk about ARKQ. Tesla's in this ETF. We talked about Teradyne recently. We're going to talk about Nano Dimension in this video. But this is, a lot of the Cathie Wood ETFs look very similar to this. A wave one and a wave two, large wave three impulse. I believe we ended wave four right around the 38.2% retracement. I don't believe ARKQ is going to go below 72. I think it's within a wave five higher right now. The length of wave three, place of the wave four low, will take ARKQ above the wave three high on a wave five higher to 148. We talked about Teradyne in this ETF recently. We're going to talk about Nano Dimension right now, but Nano Dimension, Teradyne, and Tesla, they're all, I believe, about 3, 4, 5% holdings of this ETF. That's off the top of my head. I think this is a wave one and a wave two, large wave three. Wave four ended, right before the 38.2% retracement. I don't believe ARKQ will go below 72. We'll see it go the length of wave three, place of the wave four low. I'm ultimately looking for, kind of similar to some of these other growth stocks that, towards the end of the first quarter, conservatively, towards the end of, June of 2022, we see that this entire ETF has gone the length of wave three, placed at the wave four low. So I'm expecting ARKQ to go all the way to 148, not go below 72. Within that ETF, we talk about a lot of these growth stocks looking very good. We talk a lot about, these kind of sexier stocks looking very good. A lot of these small cap stocks looking very good. I think Nano Dimension is one. It formed a wave one and a wave two, had a big wave one and another wave two in at the 61.8 to 78.6% retracement. Okay, this wave 2 is ending with momentum divergence. We have the end of the quarter coming around. We're seeing Nano Dimension on the bar chart straddle and strangle screener. It looks like Nano Dimension is going to have a big move. I don't believe it will go below the 78.6% retracement. And it will go the length of wave 1, place of the wave 2 low. With a lot of these growth stocks, I'm expecting an explosive move from Nano Dimension. In the coming, quarter, 2 quarters, we're going to see that the length of wave 1, place of the wave 2 low, has taken Nano Dimension to 21. I think that ARKQ, the Teradyne and Tesla holdings within that, as well as Nano Dimension, they're all going to begin large rallies together. The length of wave 1, place of the wave 2 low. Nano Dimension should rally with the growth stocks. It should rally with the small cap stocks. It should rally with the ARKQ components like Tesla and Teradyne and go the length of wave 1, place of the wave 2 low, hold above the 78.6% retracement. We're going to wake up and, all of a sudden, all these growth stocks that we haven't talked about since the fourth quarter of 2020 are once again, going to start surprising us in the fourth quarter of 2021. Okay, so that's Nano Dimension. I think it's going to hold above 4.86, go the length of wave 1, place of the wave 2 low, begin a large outperformance with Tesla, Teradyne, and ARKQ, ultimately go reach 21. If we look at Netflix, let's talk about some software stocks getting a lot of intelligence from Netflix today. Let's first talk about this bigger degree picture. We're close to seeing that Netflix is going to break and close above these previous all-time highs. That's going to confirm from a classical trading perspective, 13, 14 months of institutional accumulation. I still like the short-term view of Netflix the best. It's looking very pretty. That this is a wave 1 and a wave 2. Let me make sure we can see this, that this is a wave 1 from this 519 low. This is a 1, 2, 3, 4, 5. Wave 1, we have an ABC correction. We pull back to the 61.8% retracement. I say we're not going to go below the 78.6% retracement. We don't. The length of wave 1, place of the wave 2 low. I mean, this is why I draw these silly equal lines, guys, because the computer algorithms, they like them. The length of wave 1, place of the wave 2 low goes exactly to that minimum wave 3 target. The textbook wave 3 target is 606. That wouldn't be the top. We'd have a shallow wave 4 correction that would end between the 23.6 and the 38.2% retracement, and then see Netflix go on a wave 5 higher. That will be the length of wave 1, placed at the wave 4 low. Netflix is a harbinger. It should be going to 650, 660 within this cycle from the 520, 519 low. And this is a harbinger right now for a lot of stay-at-home stocks, a lot of software stocks doing very well. I think Amazon, Roku, they're going to support this message. This is a 1, 2, wave 3 in progress. 606 is that textbook wave 3 target. We'll have a shallow wave 4 correction, go on a wave 5 higher. Netflix looking good. We're talking about more software stocks right now. Salesforce is another one, right? Oh man, all of a sudden, right? The end of the quarter comes around. We have a whole new bunch of leaders. What is this for Salesforce? Well, this is a massive base that is a year into its life cycle, okay? So there's basically been a debate going on. Has Salesforce been being distributed by large institutions or accumulated? And we're very close to getting a definitive answer of yes to that question. Salesforce has been being accumulated this entire time. It's going to go follow Adobe, right? With a lot of these stay-at-home stocks, it's going to go on a wave 5 higher. I believe that there's a lot of ways to count Salesforce. One of them is that this is a 1, 2, wave 3, and we ended wave 4 at the 50% retracement. We're going to see Salesforce go the length of wave 3, place of the wave 4 low. That's going to take Salesforce to about 358. So Salesforce is going to 358. Netflix is breaking out too. Holy cow, those are stay-at-home stocks, right? And we just talked about the idea that Disney reaches 216 and has a big pullback. Just something to think about. But let's look at, what maybe a more aggressive count would be. Yeah, that's a 1, 2. And I think this could be another wave 1 and another wave 2. It's the same idea. We're going to go the length of this rally, place it this low. We're going to see Salesforce hit 358, in the coming quarter, conservatively in the next 2 quarters, it'll reach 358. But in this view, that's not going to be the top. That's going to be the conservative wave 3 target. We'll have a shallow wave 4 correction, go on a wave 5 higher. Netflix and Salesforce, they're supporting the idea that a lot of stay-at-home stocks, a lot of software stocks are about to do very well. Here's Amazon, right? This is another one. 1, 2, 3, 4, 5, wave 1, ABC correction, wave 2. We have another wave 1 cleanly subdivided into 1, 2, 3, 4, 5 waves. We pull back to the 78.6 to 61.8% retracement. I think right now we can say the invalidation level is that low of 3,127. If Amazon's above that low, this is wave 3 of wave 3. The next minimum target is going to take Amazon to around 3,822. The textbook wave 3 target is the 161.8% extension. That's around 4,127. Amazon's looking like it's going to go hit that, pretty conservatively in the next 2.5, 3 months. And then even then, that wouldn't be the top. We'd have a shallow wave 4 correction. I'd still be looking for a wave 5 higher to ultimately take Amazon to 4,346. It's unlikely the stock market will crash during that time, but it's also looking like more evidence. We just talked about Netflix. We just talked about Salesforce. Some of these stay-at-home stocks are really about to do well in kind of the bigger picture. And a lot of growth stocks even are about to do very well. Amazon going to 4,172 for the textbook wave 3 target. Then I would expect a shallow wave 4 correction before a wave 5 higher to the 4,300 range. That could all happen within the fourth quarter. Roku, this is another one, right? It forms this huge base. It breaks this high. It goes and tests that 61.8% retracement of wave 1. Let's talk about the full count for Roku. I think this is a wave 1 and a wave 2, right? Isn't this another one? Just like AMD, right? Just like Taiwan Semiconductors. It's too crazy that this rally from, March to February will get replicated. Well, Advanced Micro Devices has already done this, right? Cloudflare has already done this. The length of wave 3 placed at the wave 4 low. We're going to take Roku to 707. In my opinion, that's actually going to be a conservative wave 5 target because this very well could be an Elliott wave nest where that's a 1-2-1-2 Elliott wave nest. I'm going to stick with the more conservative view and say we're ending a wave 4 at the 50% retracement. It looks like right now that Roku formed a wave 1 of wave 5 and it's putting in wave 2 of wave 5 right now. So I measured the retracement zone. It's turning around at the 61.8% retracement. It's within a wave 5 high right now. This is wave 1 of wave 5 and wave 2 of wave 5. Waves 3, 4, and 5 of wave 5 will take Roku to 707. That should happen by the end of the first quarter of 2022. Roku looking good. Don't want to see it go below 272. I talked about it right when it hit 0% implied volatility, ranking percentile, and then, like clockwork, boom, breaks above this wave 3 high. Confirms months and months of institutional accumulation. Looking great. I think it's within wave 3 of wave 5 right now, heading to 707. It's another one, right? It's a software stock. TWLO. Oh, man, I like this one a lot. This is a wave 1 and a wave 2. In my humble opinion, for TWLO, wave 1, wave 2, I think this is another wave 1 and another wave 2 that ended at the 61.8 to 78.6% retracement. It's within a wave 3 of wave 3 right now. The length of wave 1, pretty conservatively placed at the wave 2 low, should take TWLO to about 500. That wouldn't be the top of any kind. We'd have a shallow wave 4 correction. We look for a wave 5 higher for TWLO. And I think on the short term, it looks something like this. This is a wave 1 and a wave 2 from that low we formed in May. And we're within waves 3 and wave 4 higher right now. So, I'll make sure the full count is clear. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. The length of wave 1 placed at the wave 2 low. We'll take TWLO to 500. We'll have a shallow wave 4 correction and go on another leg higher for wave 5. The length of wave 1 again would be the wave 5 target. That could take TWLO towards the end of the first quarter to 678. I think in the short term from this May low, it's formed another wave 1 and then it's putting in wave 2 right now at the 61.8, the 50% retracement. So I think TWLO, if we want to be a little tighter, will hold above 304. The invalidation level is 297. I'm expecting TWLO will begin wave 3 of wave 3 of wave 3, have an explosive rally, in the coming quarters that will take it ultimately to around 678. OKTA, very similar view. A lot of these software stocks, right? The whole sector is saying the same thing. But if you're not looking at it, you're not going to see it. OKTA is, another one. Actually, someone pointed out that OKTA was doing very well. I was very proud of that. They said that this is a wave 1 and a wave 2. We're then a wave 3 higher right now on the larger degree. That minimum wave 3 target is around 322. OKTA formed another wave 1, cleanly subdivided into 1, 2, 3, 4, 5 waves, then put in another wave 2 low. I think it formed another wave 1 and another wave 2. It's within a wave 3 of a wave 3 of a wave 3 right now. Ultimately, I think 308 to 322 is written in the sand. It's kind of already programmed. OKTA's going to the 300s. That's not going to be the top either. We'll have a shallow wave 4 correction, go on a wave 5 higher. OKTA looking really good. It's a lot of evidence, really, that it's going to go break above, this wave 1 high, confirm, 6, 7, 8 months of accumulation like many growth stocks, especially many software stocks, and go on a wave 3 of wave 3 of wave 3 higher. Ultimately, I'm expecting, in the next couple of months, we're going to realize that 308 to 322 was an extremely conservative wave 3 target. So OKTA's looking good. It looks almost identical to TWLO. Pinterest and Fastly, these are some laggards in the software sector and in the growth sector. I think for Pinterest, it looks something like this: a wave 1 and a wave 2 from that all-time low. We form another wave. This is either another wave 1 and another wave 2, or it's a wave 3 and a wave 4, ending right around the 50% retracement. So Either way, I think the length of wave 3 placed at the wave 4 low will take Pinterest on a rally to 132. Really, the best invalidation level is going to be the 61.8% retracement of about 40.58. It's a little wide, but I think Pinterest is looking good here, that this is a 1, 2, 3, 4. The length of wave 3 placed at the wave 4 low. Pinterest will hold above 40, go on a wave 5 higher. There will be the length of wave 3 placed at the wave 4 low, ultimately reach 132. More aggressively, it'd be the same idea, but just that this is a nest. It's another wave 1 and another wave 2. Pinterest holds above 40 and goes on a wave 3 of wave 3 higher. It's still the length of this rally placed at this low where we get our target, but in this scenario, that's a minimum target. We'll have a shallow wave 4 correction, go on a wave 5 higher. I think Pinterest holds above 40, goes on a rally to 132. That could happen by the end of the first quarter, more conservatively the end of the second quarter, but I think really by the end of the first quarter of 2022, we're going to see a lot of these growth stocks have replicated, that rally, done what AMD has already done, replicate the rally from March to January, placed at the, May low. Here's Fastly. Fastly is another one of these laggards in the software and stay-at-home sector that's going to come to life. This chart is really starting to firm up right now, and everyone says, hey, I wish I bought Amazon in 1996. The truth is, if you bought Amazon in 1996, you would have sold it in 2001. I think we look at Fastly right now. This is Amazon in 1996. This is Amazon in 2001. I really believe that, and I think right now, Fastly, the only way to play it is tight. If it's above 33.87, it's within a wave 3 higher right now. The length of wave 1 placed at the wave 2 low is going to give a wave 3 target that's going to make me go to an insane asylum of 159. But that's just the length of this rally placed at this low. Datadog and Fastly, they move together. Datadog is already above all of these highs. It moves step for step with Fastly in 2020. We're seeing across the market, Salesforce and Netflix, a lot of these laggards in the software sector, they're getting ready to boom right now. I think Fastly is going to be one of them. It's not a one night stand. It's the wife, it's the one you marry. It's the length of wave 1 placed at the wave 2 gives a minimum wave 3 target of around 159. That's just the wave 3 target. We have a shallow wave 4 correction. We go on a wave 5 higher. Ultimately, I'm expecting 1, 2, 3, 4, 5 waves to take Fastly in the longer term cycles all the way to 262. And then I'm expecting that 1, 2, 3, 4, 5 waves impulse is all going to become part of a larger degree wave 1. So when you're early into a stock's life cycle, there's a higher risk, higher reward. Fastly might be worth it if it's above 33. The next targets are going to get me locked up. So that is Fastly. Here's Procter & Gamble. I want to talk about Walmart, but Walmart and Procter & Gamble, they're getting very close to breaking this high from the fourth quarter of 2020. These are also kind of in the idea that Walmart and Procter & Gamble, they did really good for the same fundamental reasons in 2020 that a lot of the stay-at-home stocks, did well. And I think that if we look at Walmart and we look at Procter & Gamble, they're looking really good for a lot of participants in the market, even just general market bulls. The length of wave 1 for Procter & Gamble placed at the wave 2 low will ultimately take it to 174. We've talked about Walmart doing the same thing, going to 178. But Walmart and Procter & Gamble are very close to breaking this wave 1 high. I think Procter & Gamble is going to break above 146, 147, confirm, months and months and months, almost a year of institutional accumulation, institutional basing, and that it's on a path right now to a wave 3 equal legs target, which is 174. It's going to do that with Walmart. It's unlikely the stock market will crash during that time. Ethereum and Marathon Patent Group, Ethereum's getting close to 4,000. I think if we look at either Solana or Cardano, they've already broken above these wave 1 highs. I just want to look at, Ethereum by itself. Ethereum is getting close to breaking the May 10th high. We can wake up tomorrow and see that Ethereum is above this high. That's going to be a huge deal for Bitcoin. It's going to be a huge deal for really any cryptocurrency or cryptocurrency play that forms this exact same high. Let's just get the date down. If any, other crypto play formed a wave, formed a high on May 12th and Ethereum breaks it, that's honestly going to be a green light for that whole sector. We'll talk about Marathon Patent Group in a second, but Ethereum is getting close to breaking the, this high. I mean, man, if you or a loved one has considered shorting, cryptocurrencies, seek help. Do not ever make another trade. I think that Ethereum is going to go the length of wave 1, place of the wave 2 low. The next conservative target is 6,000 with a shallow wave 4 correction going a wave 5 higher. Ethereum is about to break the May 10th high, confirmed that basically every cryptocurrency, that was a huge bear trap. That was a huge shakeout move. The institutions were loading up for what was potentially a once in a lifetime opportunity. The length of wave 1, place of the wave 2 low takes Ethereum to 6,000 with a shallow wave 4 correction. We're going to wave 5 higher. Last stock, Marathon Patent Group. It's the same idea. It actually formed a high. It acted as a leading indicator for crypto. It formed a high in early May. I think Marathon Patent Group is really starting to firm up. It's a 1, 2, 3, 4, 5, large degree wave 1, and then to put in a wave 2 at the 61.8% retracement. I think Mara will go the length of wave 1, place at the wave 2 low, getting very close to breaking that, previous all-time high of 57, the length of wave 1, place at the wave 2 low. I got laughed at for saying Marathon Patent Group was going to 75. It's not so funny anymore. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. We can be objective right now and say this is an Ichimoku Cloud breakout for Marathon Patent Group. That's helping to confirm that that's a wave 2 low we've put in. This is looking really good for Marathon Patent Group. It's going to hold, these lows, and it's going to go, follow Ethereum, follow a lot of these cryptocurrencies one by one. We're going to see that, April and May high get broken. I think Ethereum and Marathon Patent Group are next.